It's a crucial 3 weeks for the ASX with earnings season ramping up and plenty of big companies under pressure. Tech stocks in the US continue their rollercoaster ride, and Prime Minister Scott Morrison forgives his deputy Barnaby Joyce for some very, very critical comments just as Parliament kicks off. It's Monday, the 7th of February 2022. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. Did you have a nice weekend?
I did. It was a lovely weekend. How about you?
Good. I have a quiz question for you. You're a bit of a quiz man. What was yesterday the anniversary of?
Yesterday was the 6th of February. I have absolutely no idea, and there's not enough time to Google it.
70 years since Queen Elizabeth II ascended to the throne.
Really?
70 years. I went to a functioning government house in Sydney, and the Governor-General of the state, Margaret Beazley, explained the gift that the good people of New South Wales sent the Queen. Guess what it was?
Something made with native ingredients, I'm sure.
That's not bad. A bottle of gin.
A bottle of gin?
With native ingredients, encased in an oak cover made at a men's shed in Western Sydney.
That is a fantastic gift. That's the kind of gift that isn't just going to get tucked into a cupboard somewhere in Buckingham Palace. That's actually going to get consumed.
Exactly. I thought it was great. Anyway, 70 years. Good on Queen Elizabeth.
Yeah, and good on New South Wales for that thoughtful gift.
Yeah,
well done.
Indeed.
All right, and of course, stay listening for Sean's chat with Dermot Ryan from AMP Capital about the upcoming earnings season. But first, Sean, as I mentioned, earnings season does kick off this week, and rising consumer prices and supply chain challenges are really threatening to eat into profits.
Yes, and it comes as global markets are already pretty jittery over the prospect of higher inflation and interest rates in some of the big economies, and of course fears of overheating. Too many disappointments on the ASX is likely to trigger some big share price falls. This earnings season is forecast to be more sedate than last fiscal year when profits grew by about 26%. We're not going to see that again. Some of the big companies reporting this week include Commonwealth Bank on Wednesday, the ASX itself. AMP will be a really interesting one, so too AGL, the energy company. That's on Thursday. The earnings season goes into full swing the following fortnight. Now, running through some of the top companies, let's take the miners first up. They face rising staff costs as Western Australia remains shut down and rainfall in Queensland has disrupted production. However, commodity prices remain high with iron ore creeping up over recent weeks. The battery metal groups are doing well off the back of higher prices, so too the gold and energy companies.
You mentioned Commonwealth Bank before. The financial services sector really is a big one, an important one for us to watch because so many people hold shares in the banks.
Absolutely. Now, Commonwealth Bank is the only one of the big four to report half year, though the other three will put out quarterly statements. And in fact, Westpac did so last week. It showed higher earnings and good cost cutting, but pressure on profit margins. Investors like the result, and Westpac's share price did really well last week. But the sector faces higher interest rates, which should help the bottom line because rising rates allows the lenders to expand their margins. But there's significant competition in the market from the non-banks like the buy now, pay later groups, and many customers will have been hit by the Omicron slowdown. Also, the housing market is definitely coming off the boil.
All right, what about the rest?
Well, let's run through them. Retailers have been hurt by the Omicron slowdown late last year, though turnover before December was actually accelerating. A big challenge for those guys is getting products onto the shelf. Supply chains are a real problem for them. Travel and tourism stocks will demonstrate how slow it's been for that sector. Really hard for them to improve. Earnings from the real estate investment trusts are likely to be fairly mixed. Then there's the health and tech sectors. Now, they've benefited and been buffeted by the course of the coronavirus outbreak, particularly in recent weeks. As always, investors will be very keen to hear CEO comments and what's happened so far this year and what the next 6 months looks like. What investors don't want to hear is excuses. They don't want management blaming COVID-19 anymore, and they don't want to see earnings lower than expected. It's going to be a fun February, Michael.
It certainly will, and we will have everything covered here on Fear and Greed. How did the market finish last week, Sean?
Well, the local market ended the week up 0.6% on Friday to 7,120 points. That means over the 5 sessions. The S&P ASX 200 was up about 2%, and that, of course, was helped by hopes that interest rates won't rise anytime soon. I mentioned Westpac. It closed up 2% for the week. Mining Group South 32 did really well on Friday. It jumped more than 3%. Building Materials Group James Hardie rose 2.8%. And WiseTech Global was up 2.5%. I must mention Boral. It tumbled 42% on Friday, but it was ex-div day. Now, remember, the group announced a special dividend to shareholders worth about $3 billion in total earlier in the week. If you held shares on Thursday, you got that special dividend. If you held them on Friday, you didn't. That's what ex-div means. And of course, that's why its share price tumbled, because anyone who held those shares on Thursday, we're getting a lovely little bonus.
All right, now Wall Street obviously had an extraordinary week last week. How did it end up over the weekend, Sean?
Well, you mentioned particularly the plunge in Meta shares, that's the parent group of Facebook. Well, they stabilised over the weekend, having fallen 26% just on Thursday. There was good news out of online seller Amazon, which posted strong quarterly results, and its share price ended up 13.5%. These are just massive moves for really big stocks. Like the jump in Amazon's share price added about $200 billion to the value of the company. Incredible. Microsoft, Netflix and Alphabet, they're all higher. Just crazy times at the moment. By the end of the day on Friday, the tech-heavy Nasdaq was up 1.3% and the broader S&P 500 was 0.5% higher. It's a tough end to the week in Europe with all the main indices tumbling. The announcement on Friday morning, Australian time, that the European Central Bank was thinking about lifting rates weighed on markets. There'll be plenty of focus this week on Asian markets. China's been closed for a week for the lunar holiday and Hong Kong has risen, so traders think the Shanghai index could be in for a good week.
Okay, what about commodities?
Well, Brent crude rose again over the weekend, hitting a new 7-year high. A barrel of Brent is worth nearly $93. Bad news at the petrol pump, obviously. Coal prices were flat last week, but they remain really, really high, about 160% above a year ago. Great for our exporters. Gold's trading above $1,800 an ounce, and iron ore is edging towards the $150 a tonne mark. But really, the commodity that's surging most is lithium. Why? Well, we need lithium in batteries. Its price is up 45% over the past month. Incredible.
That really is incredible. All right, big start, massive start to the week. We'll be back in a moment with the rest of the day's business news. Sean, there's plenty of stories around today. The Barnaby Joyce texts that were released over the weekend were pretty outrageous. As a backbencher nearly a year ago, Mr. Joyce had called the Prime Minister a hypocrite and a liar and said he never trusted him. He then apologised for it when the text surfaced, and Scott Morrison yesterday said all is forgiven.
Yes, it never ceases to amaze me why people put those sorts of comments in text messages, particularly when you're a politician. Prime Minister Scott Morrison yesterday said the texts were a product of human frailty. Very generous. Can you imagine, Michael, how much Barnaby liked hearing Mr. Morrison say the texts were a product of human frailty?
Oh, he would have loved it, wouldn't he?
Incredible. Mr. Morrison said politics is a brutal business and politicians say and do things they shouldn't. But who was he to judge? That's what Mr. Morrison said. It's a pretty bad start to a really important week in which Parliament returns. And of course, the unofficial election campaign continues. I don't know about your electorate, but in my electorate, I'm already seeing posters going up on power polls.
I haven't seen any yet, but I'll keep an eye out. Sean, just on Barnaby Joyce, how much damage do you reckon that would do to the Prime Minister? Because Barnaby already has a reputation as a bit of a wild card, a bit of a maverick, and people tend to take what he says with a bit of a grain of salt, it seems. So are they going to do the same for this?
Well, Michael, you're right. But if it had been former Deputy PM Michael McCormack, I think it would be very critical. But it is Barnaby. And I think you're exactly right. People do take stuff with a grain of salt. It's not going to help. It allows Labor to stand in Parliament tomorrow and ask questions about what Barnaby thinks of the Prime Minister. And that's never good.
No, certainly not. All right, the Reserve Bank, Sean, released new forecasts for the economy on Friday. Did we learn much new?
Sort of, though the Governor, Philip Lowe, had told us some of the news earlier in the week. Running through the key stats, the central bank thinks the unemployment rate will fall to about 3.75% by the end of this year. That's the lowest level in 5 decades. The current rate is 4.2%, of course. Underlying inflation is tipped to rise to about 3.25% by June, and wages growth is tipped to hit 3%. Now, the Reserve Bank has consistently said it won't move on interest rates until wages growth was sustainably above 3%. What's it all mean? Excellent question. I suppose it suggests that the most likely time for the first hike in the official cash rate in more than 11 years is still 12 months away.
I like how you just asked yourself the question of what it all means. I'm feeling a little bit redundant here, Sean.
Sorry.
I'm
amusing myself here.
That's right. Well, I'll ask you a follow-up, though, because obviously the discussion about interest rates is really important for the home lending market. So the auction results over the weekend, how did they all go?
Well, not quite what the doctor ordered, and I suppose I mean Dr. Philip Lowe in that instance.
Oh, well done.
Clearance rates in Sydney and Melbourne, which are the two most expensive and most stuttering markets, shot up according to CoreLogic, 77% in Sydney and 75% in Melbourne, and that's despite there being many, many more auctions over the weekend. Anecdotally, there were more bidders and larger crowds at auctions. Across the country, there were nearly 1,800 homes up for auction. That's about 50% more than a week ago, and the clearance rate was a very, very solid 74%. Whether people are jumping in to buy and try and fix their interest rates before rates start rising, whether people don't care, don't know. The market is still pretty good.
Yeah, certainly seems so. The tax office, Sean, released figures last week that showed just how generous tax concessions are on superannuation contributions and capital gains.
Yes, which of course feeds into the previous housing story. The idea with these tax concessions is to encourage people to plan for the future and save for retirement, obviously, and they work. Treasury figures show that Australians will bank more than $400 billion in tax concessions over the next 4 years. The annual tax benchmarks and variations statement released last week shows that $55 billion in capital gains tax discounts were provided to people on their main residence last financial year. That is a massive benefit. That's, of course, the tax people didn't have to pay because they lived in the house that they sold. It's a fair chunk of money. Regularly, politicians and offshore regulators, including the IMF, have recommended the concessions on superannuation contributions be cut, but it would be political suicide, so it ain't happening.
Now, Sean, I know you love your wine, so I'm not surprised to see this story make the cut today. We've had plenty of bans and tariffs imposed by Beijing over the past couple of years, and one sector that really hasn't been able to fully recover is the wine sector.
Yes, the latest Wine Australia export report shows that overseas sales of the local drop fell 30% last year, mostly thanks to tariffs imposed by China. Australian wine sales to the world's second largest economy went from more than $1 billion to $29 million. Overall, total overseas sales were down 30% to just over $2 billion. Wine exports to China were hit by tariffs in late 2020 as political tensions between the two countries intensified. Now, other commodities also got hit with tariffs or bans, including coal, beef, barley, wheat and sugar. But in those cases, growers have been able to find alternative markets, and exports for all of them actually rose last year, whereas wine exports have done well in sales to Hong Kong and Singapore, but not made up the gap. Not helping was the fact that sales to the United Kingdom and the United States were also lower.
Okay, Sean, what's making headlines in today's news media?
Well, Federal Treasurer Josh Frydenberg is in several media outlets this morning saying it's time to get some fiscal discipline back into the economy and suggesting Australians take advantage of the strong jobs market to score a pay rise. And the Australian is reporting that the Morrison government has given the ABC a pre-election pay rise, committing to a $3.28 billion support package over the next 3 years and scrapping its controversial indexation freeze on the national broadcaster's budget.
All right, running through some of the other stories around today, the UK government is in talks with Australia's Macquarie Group over needing to raise £10 billion or $19 billion to create a fund dedicated to infrastructure deals in the US, according to media reports. To do that, of course, you need plenty of friends and people who support your expertise in infrastructure, and Macquarie is among the biggest global players in that space.
Very good gig to get. COVID cases are falling, though still measured in the thousands. Victoria reported 7,200 cases yesterday and 6 deaths. New South Wales recorded almost 8,000 cases and 28 deaths. Queensland recorded 5,700 cases and 9 deaths. And still on COVID, Prime Minister Scott Morrison said one matter that needs to be addressed this week is when to open up the international border and allow visitors back into Australia.
Media giant News Corp recorded its highest earnings since its separation from 21st Century Fox, triggering a 12% jump in its share price on Friday. Pre-tax earnings were up 18% in the 3 months to the end of December. It appears the shift to streaming, think KO and Binge, is working. Speaking of Binge, Sean, finally I took your advice, got Binge and started watching Succession.
It's great, isn't it?
It is a great show, except I've never seen a program where every single character is completely unlikable.
Yes. There's one character, the very tall chap, Greg. I kind of like him.
Cousin
but
Greg.
actually, Cousin Greg. But as it goes on, actually, he's probably unlikable too. You're right.
Okay.
All unlikable.
Well, I will continue. I'm only on season 1, so I'll report back when I get to season 3 and see if I still hate everybody. Meanwhile, REA, Sean, which is majority owned by News Corp, recorded a net profit up 31%, and its boss, Owen Wilson, said he isn't concerned about the impact of rising rates on the market.
And of course, Michael, home lending, we mentioned it earlier on in the show, it's a very lucrative part of a bank's business, and the fight between the big four lenders is fierce. ANZ late last year stated it would be focusing on improving its recent poor performance, but the latest figures from the Australian Prudential and Regulation Authority shows that the Melbourne-based bank is still losing ground against its competitors. Commonwealth Bank and National Australia Bank are leading the way, while among the regionals, Bank of Queensland is doing best. And just as an aside, Rate City said banks have increased their fixed rate home loans by as much as 1% over the past year. Rates are on the rise.
Yeah, they're certainly creeping up. What's the key overseas news this morning, Sean?
Well, the employment market is on a tear in the United States with nearly 500,000 jobs added last month. The unemployment rate is at 4% and President Joe Biden over the weekend campaigned on the strong economy. Certainly, it's good enough for interest rates to start rising next month. Also, China's President Xi Jinping has backed Russia over the standoff in the Ukraine and accused the United States and its allies, including Australia, of course, of heightening the arms race as the Winter Olympics kicked off in Beijing. Mr. Xi met with several presidents over the weekend, including the heads of Egypt, Serbia, Kazakhstan and Turkmenistan. Michael, for historians, there's an incredible irony, I think, in the two dominant forms of communism cozying up to each other.
Yeah, it certainly is.
And finally, we can't not mention the Winter Olympics. I reckon it's been pretty good fun, Michael. Congratulations to Jakara Anthony on winning gold in the women's mogul title and to Tess Cody for winning a bronze in snowboarding. And you've got to love the curling duo, Tylee Gill and Dean Hewitt, who secured Australia's first ever win in the sport, in a round match that was. They won't progress any further, having already lost 7 times, but it was great to see them get a win. In fact, Michael, they ended up with 2 wins.
All right, Sean, up next is the Fear and Greed Daily interview, and today you're speaking to Dermot Ryan from AMP Capital.
Yep, we're talking about the upcoming earnings season. Perfect timing, and Dermot's got a few ideas, few companies he likes and a few he doesn't.
Now, there's plenty of other good listening in the Fear and Greed playlist as well. The Week Ahead is out today, featuring our resident economist, Stephen Koukoulas, and the Sunday edition, which was released yesterday, of course. I think my highlight of the Sunday edition yesterday, Sean, was when we were discussing text messages that have been sent in the workplace. This is obviously following the criticism of Scott Morrison, and you admitted to a rather unfortunate text message that you sent in the office that I'm not going to disclose any more detail on. You'll have to listen to the Sunday edition to find out.
Thank you, Michael. I'm really pleased that you reminded me of that one.
That's what I'm here for. Thank you very much, Sean.
Thank you, Michael.
It's Monday, the 7th of February, 2022. Make sure you're following the podcast and join us online on LinkedIn, Twitter and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.